Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is December 19th, 2007, and tonight we're going to be talking about natural gas. The ETF is UNG, and to give a kind of a breakdown here, we've got a lot of negativity, which you'll see is unbiased for the most part, where we have the short, intermediate, and long term are all pointed to the downside. We've got the technical rating due in part to a lot of the trends all point to the downside, but we have a wave low that just triggered here inside of the natural gas. And at the same time, I'm just going to point this out, that if you wanted to get to this next level, if you came to signals and then to patterns, which I've got set up right here, here is the new section here that's going to really be based upon a lot of the patterns, near-term patterns, basically the last 3, 4, 5 days or so related to the individual markets. But one that is of particular interest here is market reversal. We have a low 0, meaning that the market is low and headed higher. If it was high, it was high and headed lower. And what we have is a 0 here, and the 0 means that it actually occurred today. So here is natural gas. Again, the ETF is UNG. And if we take a look at natural gas in this instance, let me first pull up the daily chart where we talked about a wave low having occurred here. So here's the blue dot. It's pointing to the upside and is looking at a base having occurred here. And so if you kind of look back here in time, today's action on the 19th really wasn't that dramatic. It was yesterday's action that really caused the market to really start to buoy to the upside. And so what we're looking at right now is a really good indicator. And if we take a look at, again, these will be daily charts here, but one that relates specifically to the pattern. So I'll just make this a little bit larger. There was an indicator that occurred just the other day called Pulse, and that will look for bottoms in the market. Then we had this little check mark, this little crosshaired one, this red, which actually occurred today, and this is a stretch low. And this generally means a turn in the trend whenever it occurs. I'll show a couple of examples from the past. Here's one that occurred as soon as it did, the market trended. It's not talking about a major trend reversal, but it's talking about something that would be substantial and something that we'd want to look at. So the shorts should be wary, and we want to look at where the trends are headed. So here's one that occurred here. If we go back in time, here's one that occurred last year on the 14th. The market rallied to the upside. Here's another one. It rallied short term, obviously choppy, but it did rally. Kind of hidden in here is another check mark or crosshair where the market rallied. This one is not a this is to the negative, so it's a little bit brighter color, so it doesn't actually represent. It's actually the opposite, where the market would come down. Here we had a marker where it rallied very quickly, but then it fell off. So it's not always going to be looking at a major trend. If we go back a little bit further in time, I'll just give you some dates here. This occurred on the 9th, right through here. If I can get it to work here. Stretch low. Then we had another one that occurred here back on the 29th, October 29th of 14. You can see there's a brightish one that's up here. This is again the opposite. So you get the idea that whenever we get a stretch low, which is essentially what we're having occurred here today, it's good for the market for the longs, the UNGs, and for those of you that are trading the futures, going long natural gas in itself. If we take a look at the website, just want to show a couple things. Natural gas is at the upper end here. There's a lot of energy behind the market. There's a lot of push behind the market, and a lot of that occurred because of not today but the day before, and it's really starting to really heat up here. When we look at the systems, here is a breakdown of all the open position profits, losses for the individual markets doing well in cattle, cotton, palladium, Dow Jones, S&P 500. But you'll notice, if I can find it here, natural gas right here. Natural gas is actually flat. And so just pull up the number of systems that we have here, and you'll see that they're all flat and they're just waiting for an opportunity here. So we had that thrust yesterday, had a little bit of a consolidation. I expect a little bit of choppiness to the market, but the general trend with the stretch low that is popping up here today, I would expect the market to really start to rally. So for the time being, the systems are just on the sidelines, and they're waiting for an opportunity to go actually along the market. When we look at the seasonal tendencies, here's the 5-year. You can see that it's kind of hard to see here, but there's a little triangle right here, and you can see that there's a volatile surge to the market is probably the best way to express it on the 5 years. And the 10 years, it's still kind of the same thing, but this will typically top out later part. I mean, obviously it's the 19th of December, but the tail end of December, we'll see it top out a little bit, and then going into the remainder of the year, at least according to the 10-year seasonals, we'll see the market really sell off here. So on the short-term basis, as I showed a couple of examples here with this trigger here with that stretch low, that we can see the market really change its trend, or we can see instances where it just kind of bounces a little bit. But typically it's pretty well. That lines up with the traditional seasonal tendencies to the market. There's a lot of energy behind the market. So that being the case, it looks good for an opportunity for the systems to actually go long the market. So if ever you're interested, you just come to signals, you get the deep dive analysis, which is at the market level, and then the patterns. And this is obviously the new section where we've broken out a lot of the content from our systems, and we're turning them into alerts that are going to pop up here. So again, here's the stretch. It's a low. The number that follows all of these different alerts are the day in which it occurred, the trading day in which it occurred. So here we have a 0. Today is what, Tuesday? Then you've got some 2s and 4s. Those obviously would go back further trading days. So we're looking at Friday of last week. We're looking at mid last week for some of these different types of indicators, and they will stay on the map here on the table for the specific reason that we want people to see that certain things have actually taken place, and that there's opportunities here to see what's happened historically. So all this will be found, as I mentioned, under signal, and then deep dive pattern. And I would have you take a look at over the course of the next maybe week to 10 days, taking a look at some volatile tradable opportunities on the long side in natural gas, and we'll see if the energy can stick with it. So until next time, we'll take a look at another market, but for right now, enjoy and see what we can do with natural gas. Thanks.